Well, there's more and more breaking news and trending data that's now coming out for Airbnb, in particular recreational investors who jumped into the Airbnb investment game a little too late. Well, they're starting to feel the pain. Let's talk about it. And if you haven't already, feel free to check out my earlier video that I did earlier in last year talking about this potential Airbnb crash coming to the market. It seems like it's just one thing after another. As soon as we think we're starting to get past inflation, with inflation slowly starting to come down, well, trending news and data is starting to show that deflation is starting to creep in now, and recession fears are starting to loom with the second half of this year. And why is everyone scared of recession? Well, let's look at Airbnb, for example. As soon as people ran out of money and credit card debts rose and student loans are coming back online starting in October, well, where is all this money going to come from to go on vacation? And in certain cities and major metros across the United States, they're experiencing a 50% change in revenue in Airbnb. Can you imagine buying an Airbnb and all of a sudden somebody says, yeah, whatever you penciled or calculated out, Matthew, now you're going to get 50% less of that? That can't be a good thing. And I can tell you with both certainty, as being a resident and realtor here in Phoenix, Arizona, that we are experiencing a high degree of vacancy in a lot of the Airbnb rentals today. So in closing, guys, this definitely doesn't bode well in the residential sector, as well as the commercial sector is already in the hot seat, as we know. So when you're buying these types of rentals, make sure they pencil for a 12-month rental and always have an exit strategy. As always, we'll see you on the next one.